Today's session will also help you with your preparation for your tests and exam. For today, we have 3 topics that we are going to look at. Let's see. First, we're going to look at wages and salaries, then fixed assets, and then we leave the pudding for the last, final accounts and adjustments. When we look at salaries and wages, some basic concepts that we need to look at. Employees versus employer. Now, when we talk about salaries, you immediately think about maybe your parents that earn a salary or a wage, and you see it as an income. Yes, it is an income, but we are now the employer. So this is the business. This is the books of the business that we are doing. Therefore, wages and salaries will be an expense. The employee, the worker, the employer, the business. Salaries and wages. Salaries we know paid monthly at the end of every month. Now that can be on the last day of the month, it can be on the 25th, it can be on the 15th, but it is monthly paid. While the wages can be daily, can be weekly that they are paid. Salaries will be paid by EFT into your bank account. Wages can either be cash or it can be an EFT payment into your bank account. Normal time and overtime. Maximum normal time hours 45 hours per week, but it can be the negotiations between the employee and the employer, or the agreement stipulates that the normal time is 40 hours per week. Everything that the worker works more than the 40 hours will be regarded as overtime, and overtime must be paid at 1.5 times that of the normal time rate. So if the normal time rate is 100 Rand an hour, then the overtime rate will be 150 Rand per hour. If the overtime is worked on a Sunday or a public holiday, then it must be twice the normal time. So then the rate will be 200 Rand per hour for overtime. Now, at school level, we look at the wages journal, and in the wages journal, we do the overtime. But in practice, salary, if you earn a salary, you can also work overtime and receive overtime for that. So it is not only a wage worker that can get overtime, also people earning a salary. Time wage, piece wage, you are paid per hour, or you are paid per piece of work that you've finished. Obviously, this one, there's more motivation to work quicker and more effectively. If you produce more, then you get paid more. Here you are paid by hour. So this can be that some of the employees take their time and not working effectively because they know they get paid by time per hour. Piece wage for the piece of work that is completed. And then deductions and contributions, the difference between that. Deductions is what is subtracted from the employee's salary or wage that must be paid over to pension fund or UIF or SARS. Contribution is extra, what the business contributes extra towards the pension fund or the UIF. Other thing that you also must be able to do is the salary scale. Now, here's an example. For over 7 years, a period of 7 years, this is where we start 240,000, and there's the increase per annum, and that will be the maximum annual salary for that year. Start with 273 plus the 16 to get the 290,400. Important that you notice that this is per annum for a year. So the salary scale that they give you is for a year. We will normally give you a short version of the salary scale, and that will look like this. Now, the first time if you see it, you think, must we do a calculation? Must we multiply and subtract? No. The 240 is the opening salary. The first year that you start, you earn a salary of 240,000 for the year. After that, the increase per year is 16,800 until you reach 290,400. From there on, the increase per annum per year will be 21,400 until you reach the 354,600. So that is the salary scale. Sometimes we can give you the short version and ask you questions on it. We are going to do an activity like that. When we do postings, we will usually give you the gross salary that you start with. Difference between gross salary and net salary. Now, if you look at that, it is quite obvious which one is the biggest. Very often you will ask an adult the salary, and they will tell you they earn 40,000 a month, and then your next question is that gross or is that net salary? And then they hesitate, because which one is the big one, which one is the small one? But you will never forget this again because of the G and the N. The big letter, the fat one, and the small one, the narrow, the N one. That is what is left. Gross salary or wages is before deductions, and the net salary is after deductions. So if somebody earns 40,000 gross salary per month, that does not mean that they get paid 40,000 into their bank account. They will get much less than that after all the deductions. And we say that the net salary is then the spendable, what you have available to spend. That is what will be paid into your bank account. Deductions. What is subtracted from that gross salary? Obviously, the first person taking is SARS, pay as you earn. This is direct tax, directly paid to SARS. The other one that we're going to do later in the year is VAT, which is an indirect tax where you pay via a supplier, via Pick and Pay, that you pay SARS. But income tax, direct tax. Pension fund. Whenever you earn a salary, you must make provision for one day when you retire, when you don't work anymore. So you put aside some of your salary per month in order to provide for that pension fund or provident fund that you put away. When we stop working, we don't stop living. We must still eat, we must still dress, we must still have a place to stay. And we need money for that. So while we are working, we put money aside for that. Unemployment insurance fund, that is if we for some reason lose our job, and if we've contributed towards the UIF, then we can claim for a certain number of months, we can claim a certain amount of our salary to help you until you maybe find another job. That is not if you resign, but if you lose due to other reasons. Medical aid fund, when you contribute towards a medical aid, so that when there's medical expenses that they cover some of your costs. And then staff associations or unions that you belong to. So those are things that can be deducted from your gross salary and paid over to those institutions. Again, gross and net salary. We know that the net salary is the gross, the big one, minus the total deductions. So in picture format, there's our gross salary. That's the big one. That's the 40,000. Then the deductions. We must pay SARS, UIF, pension fund, medical aid, staff association. So those are the deductions. So what's left? Gross salary minus the deductions will give us the net salary. And that is what is paid into the bank account. So gross salary, and this is also going to help you with posting to the ledger accounts. The gross salary, payments to all the deductions, and what's left is the net salary. Contributions, that is something extra that the business contributes towards the funds. Pension fund. That is more perks that you have from your employer. They also contribute to the pension fund. So if you contribute 7.5% of your gross salary towards a pension fund, maybe they will contribute a 10% towards the pension fund. So they also put away money for your benefit when you retire, when you stop working, so that you have that money available. Unemployment insurance fund, according to law, the business must also contribute a 1%. The deduction is 1% and the contribution is 1% that the employer must contribute towards the UIF for the employee. Medical aid fund, they can also contribute. That's also extra perks that you get from your employer. And then if there is skills development levy, the business contributes towards those in order to help the workers develop their skills so that they can work more effectively, so that they can maybe apply for other jobs after they've developed their skills. Again, the picture. Gross salary, we've seen this. The gross salary minus SARS, pay as you earn, minus the UIF, minus the pension fund, medical aid, staff association, what's left is the net salary. But now you also have the contributions towards the UIF and pension fund. So this is the cost to company. Very often they will ask you, what is the cost to the company for all the workers or for a specific worker? And that will be the gross salary plus the contribution. That is how much it costs the business for that one employee. Not only the gross, but also the contributions. Posting to the ledger accounts, important. Now, this is a salary journal, not very difficult. If we look at the wages journal, the wages journal will just start here with normal time, overtime to get to gross wages, but the rest is the same. In order to complete the salary journal, you just have to read very carefully. Read between deduction and contribution. So it's all about reading. Then the posting. The gross salary part, the green part, is the one, because we've seen in the previous slide, gross salary equals all the deductions plus the net salary. So obviously when we post, we will apply that same principle. And then the orange part, we have the contributions separately. So when we post to the ledger accounts, gross salary, that will be salary. We have to pay SARS, pension fund, UIF, medical aid, and then the net salary refers to the creditors for salaries. For every debit entry, there must be a corresponding credit entry. We're going to debit salaries with a gross salary. Then we credit the rest. And if we add all of those, it will add up to the 80,000. The salary is the expense. And all the others we still need to pay. Those are the liabilities that increases. With a contribution, we have the pension fund contribution, the UIF contribution. These are expenses therefore they must be debited. And then the fund must be credited, because that must still be paid over to the pension fund and to the UIF. So the 12,000 to be debited to the contribution, credited to the fund. UIF debited to the contribution and credited towards the fund. So if I have to pay the pension fund, I will have to pay them the 18,000. The deduction as well as the contribution. So if you have this picture, you will always be able to do posting, and as we will see later on, this can also be an adjustment. Salary, this is your gross salary, and then you have the contributions. These are the expenses, the rest the liabilities. Expenses, salaries, pension fund contribution, UIF contribution, and all the rest the liabilities. We said we debit salaries, and then we must credit other accounts to the value of 80,000. Pension fund contribution expense to be debited, we credit pension fund. UIF contribution expense to be debited, and we credit the fund. So if you have this picture in mind, you will never struggle with posting from the salary journal or the wages journal. We are going to look at activity 2 and 3. In your activity book, you can look on page 4 and 5. Answer book, it is page 3 and 4. They talk about Dion Martin, who is a spray painter in a panel beater shop, and they give you the earnings for the week ending. So this is obviously wages. We have to calculate Dion's net wage for the week. We have to calculate the employer's contribution for the week. And then the third question, we have to calculate the total amount that the business will submit to the medical aid fund on behalf of Dion for the month of April. So that will be for the 4 weeks. Show all workings, very important. You can't show one amount for 11 marks. If it's correct, yes, you get the 11 marks. But what if it's not correct? Then you lose 11 marks. So please, always in accounting, show your calculations. If we have a look at the information that they give us, Dion has worked 46 hours. That's the total, of which normal hours 40. Therefore, we assume that the other 6 will be overtime. He is paid 130 Rand per hour normal time, and the over rate is 1.5 times the normal rate. In other words, the 130 Rand that he will receive for normal time times 1,5, and that will give you 195 Rand that he will earn per hour for overtime. Now, this is also a question when they ask you questions on internal control, or that you see that your wages suddenly increasing. And it can be that workers are working slowly during normal times so that they can work overtime, so that they can get more money. And that is where the piece wage comes in instead of the time wage. So always to be controlled by the manager or by the employer to make sure that the employees don't bargain on overtime and then working slower during normal time. The deductions, SARS 20% of the gross, to the pension fund 7.5% of the basic, and the basic wage is the normal time, the 40 hours. Bonita Medical Aid, they're giving us the amount of 280, UIF 1% of the basic again, and the union fees 16 Rand per week. Contributions, like I said, we must just read. This is the deductions, this is the contributions. Pension fund 10% of the basic. so 10% of the 40 hours. Medical aid, R1.50 for every R1. So the medical aid was R280, 1.5 times, and that will give us R420 contribution that we contribute, that the business contributes towards Dion's medical aid fund. UIF, 1% of the basic, skills development levy, 1% of the basic wage. Again, read carefully. This is the basic wage. They refer to the basic, or that one is the gross, the total earnings. So let's do the calculation. Normal hours, Dion worked 40 hours at normal rate of R130. So that will give him 5,200. But yes, he worked 46 hours, 40 normal, so the other 6 will be overtime, and we've calculated that as R195. So for overtime, he earns 1,170. This is his basic wage, and this is the gross wage. He pays income tax on the gross wage, and the other deductions will be on the basic, the normal wage. Deductions, obviously, first one, SARS, always first in the line to take from the salary, and they said 20% of the gross wage, so 20% of the 6,370. So Dion will have to contribute to SARS or pay to SARS 1,200. Now this money is never paid out to Dion and that he must pay to SARS. That's why we say it's direct income tax. The employer deducts it from the worker and pays it directly to SARS. Pension fund. Pension fund is 7.5% of the basic, and the basic is 5,200. So that will give you a 390. Deduction, R390, that will be deducted from Dion's wage, paid over to the pension fund to his benefit. He will benefit from that when he retires. Medical aid, they gave us medical aid as 280. UIF, 1% of basic of the 5,200, which will give you 52. 10% is 520, so 1% is 52. And then the union fees that must be paid is R16 per week. So if we add all these deductions, the total deductions 2012. That must be subtracted from the gross wage in order to get his net wage, 4,358. So that is his spendable wage for the week. Yes, he earned 6,300 for the week, but he can only spend because 2,012 Rand goes to SARS, pension, medical, UIF, and the union fees. The contributions for the week, pension fund, 10% of the basic. So 10% of the 5,200 will give you 520. Medical aid contributions, 1.5 times, or R1.50 for every R1 deducted, 420. UIF, according to law, must be 1% of the basic, 52 Rand, and the skills development levy is also 1% of the basic wage of 5,200. So the total contribution, 1044. So if you ask the question, What is the cost to company for Dion? That will be his gross wage, 6,370, plus the contribution. That is the cost to company for Dion. And then lastly, we have to calculate the total amount that the business will submit to the medical aid fund for the month. So yes, we know the deduction is 280 and the contribution. The one part they deducted from Dion's wage, the other part they contribute, the business contributes, must be paid to the medical aid. But this is for 4 weeks. So for the month, they must pay the medical aid 2,800 rand. When we get to activity 3, it's about the salary scale. Gwen Kuhn, this is totally other activity, somebody else, not Dion anymore. Gwen Kuhn received her appointment letter from Mario Julius, and she was given the following salary scale, and again we remember this is annually. So per annum, per year, 156,000. And they ask us to calculate Gwen's monthly salary in her first year. That's easy. They give it to us, 156. In accounting, you read 3 times. Calculate Gwen's monthly salary. Calculate Gwen's monthly salary in her first year. What will her annual salary be in her 3rd year of employment? Now it refers to per year. What will her monthly increase be in the 6th year? And how many years would she work before she reaches 243,300 per annum? So that's actually 10 easy marks. The first one, for the first year, she will receive 156,000 per annum, but the question is per month, 13,000. 2 easy marks. What will her annual salary be in her 3rd year of employment? Now, this is the safest, always to write this out and don't try and count in your head. The 2nd year, the 156,000 plus then the increase of 16,500 in order to get 172,500. 3rd year, we are not at the 205,500 yet, so the increase still 16,500, 189,000. So what was the question? What will her annual salary be in her 3rd year? So there's her annual salary in the 3rd year. Now, sometimes you get confused and you ask the question, is this now at the beginning of the year or the end of the year? In her 3rd year, that will be her salary divided by 12 per month. So from the first month of that 3rd year, she will start earning the 189,000 in parts of per month, 12 parts. What will her monthly increase be in her 6th year? Now, 3 years we've done. The 4th year, 189,000 plus 16,500 will now give us the 205,500. But now, according to the salary scale, we are there, so the next increase will be 18,900 for the year. So in the 5th year, 205,500 plus 18,900, and then in the 6th year, 224,400 plus 18,900 to get to 243,300. We haven't answered the question yet. what will her monthly increase be in the 6th year? The increase is 18,900, but that's for the whole year. So per month, that will be 1,575 Rand that she will receive extra per month. The last question, how many years would she work before she reaches 243,300? Keyword before. Now it's easy. There's the 243,300, 1, 2, 3, 4, 5, 6 years. The question is, how many years would she work before she reaches 243? She will work for 1, 2, 3, 4, 5 years, because here she reaches the 243. Not only at the end of that year, but already at the beginning of the year, she will start earning that 243. So that will be 5 years that she will have to work before she reaches 243,300 per annum. And I hope this will help you with understanding or getting the picture of salaries and wages, the difference between the gross and the net, and specifically the posting to the ledger accounts, and understanding the salary scale.